Good Friday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Awesome.
And let me share my screen here.
Remember, we did have a question yesterday from a newer chameleon who stopped by, and he was asking about pre-market, if you can see, look at the gap and go. If there's any history you can look at if something's moving in the pre-market, I think was the question.
Yep. Okay. All right. So we'll take a look at that. And if you guys are joining us for the first time, welcome. And we really do this show to answer questions you may have. Could be Market Chameleon tools, data analytics, strategies, maybe something you've seen out there you want us to take a look at. Couple ways to ask your question is you could put the question on the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. Click on that link, takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. When you click on that, you don't have to turn on your video camera, but once we let you in, everybody could hear you. You can ask your question live and direct. So we have that one question we'll start out with, and I'll start out with the pre-market reports, and the questions already related to the pre-market report. And then what we'll do is, if you guys have any questions, we'll take those first, and if not, we'll kind of just look through some of the reports we have to get some market insights. Sound good, Will?
Yeah, perfect.
All right. So pre-market report, and these are stocks trading in the pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. Over here, we see we have 30 stocks on our percentage gainers list, 88 on the decliners. From this perspective, we look like we're setting up for a more bearish bias at the open. It's the last day of the year. See how it goes. Maybe somebody mentioned that there is some tax harvesting strategies right at the end of the year. So people look at their portfolio, and if they deem it beneficial to take some realized gains or losses due to taxes, sometimes they will do that right up. Today would be the last day to do it. So we might be seeing some of that today. What we want to do is filter out this list and narrow it down, and we're going to narrow it down to the S&P 500 companies just to take a look at what's going on there. And I'm going to use this filter here in ETF, drop it down. We get a list of ETFs to choose from. SPY, that's the S&P 500 ETF. Let's select that. And then this list below gets filtered by stocks that are holdings in that ETF, which are the S&P 500 constituents. And here you can see none so far made our percentage gainers list, 17 on the decliners list. So from this perspective, we are lining up for bearish bias at the open. I think yesterday the question was, do we track stocks that have moved in a pre-market or at the open, and what happens to stocks after they open either up or down, right? Like on a gap up or down. And I'm going to come down here, and we do have a report here. These are the last 20 days. And what it does is it captures when a stock either gaps up or opens up from the previous day. And then there's a report for stocks that are gapping down at the open from the previous day. Okay. Both of these reports separate them into those two groups. And then once that happens at the open, I'm going to come down here. So you could see here, this is yesterday's, right? Symbols. You can see Qualcomm up top. This is its industry, market cap. It shows the pre-market volume yesterday. And this is where this price opened, 108.58, which was 1.5% higher from the previous day. And then once we capture that, we track what the stock does in the first half hour by 10 a.m. and what the stock does by the close, right? So here by 10 a.m., if we give it in a half hours of trading, which is usually the big, one of the busiest time periods in the trading day, that's when kind of everybody comes in, tries to reposition themselves. And by 10 a.m., we capture what the stock price is and how that compares to the open. So you can see here, Qualcomm opened up 1.5 at 108.58. At 10 a.m., it was 109.79. It gained another 1.1% from the opening price. And then we track it. Well, if it gapped up, how does the stock perform to the end of the day? Does it continue, higher, or does that fade and it starts going, fading back towards the previous day's closing price? Here it shows that Qualcomm continued higher and finished up 1.2%. Right, and that's the list of all the stocks in the last 20 days that gapped high. So we could kind of take a sampling of what usually happens to these stocks, so we could group them together. And in the last 20 days, what's the trend been? How are the investors, trader community follow through on these types of situations? So we could see if we took all the stocks, it doesn't matter what industry they're in, it doesn't matter if it's an ETF, if it's a common stock. If we just looked at all of them as a group and the only requirement is that they gapped higher, okay, we see that there were, in the last 20 days, almost 3,600 situations that met that criteria. And what happened to those stocks as a group, by 10 a.m., we see 51% of them continued to go higher after the open, 48% lower, and on average, it was really a break even. Okay, so in other words, if each of these stocks at the open, you invested the same notional risk, it would have been a break even. In other words, you bought $1,000 worth of stock. In each of these stocks, it would be break even. So remember, that's how this is looking at it. If you invested the same notional amount in each of these stocks, right? So not as 100 shares of, for example, Qualcomm is much higher risk than 100 shares of this stock because the prices are different. So we normalize it by notion, okay? What about by the close? So only 39% of these stocks continued higher after the open, all right? 60% were lower, somewhere in change here, maybe 1%. And on average, they lost 0.6%. In other words, that by the end of the day, the vast majority of them couldn't even hold on to that opening price and finished lower than where the stock opened, right? 60% of them. So let's narrow this group down and see, well, what about if we gave them a different criteria? Maybe they had to be part of the S&P 500, right? So let's look at that. What if we required only S&P 500 stocks? So I'm going to filter this group, SPY. So now the list below got filtered by stocks that that met that first criteria, gapped up, but they have to be part of S&P 500. So here that there were 820 of those observations out of the 3,600. Okay, so you could see here, these are 820 that are part of these 3,600. And how did these 820 perform? So now we could compare them to the entire group. By 10 a.m., 45% of them went higher, 54% lower. In other words, they even fared worse than the entire group. S&P 500 companies lost on average 0.1% in the first half hour for those stocks that gapped higher. Okay, so stocks that were up in the morning, more than half of them couldn't hold on to that opening price, went lower. By the end of the day, 68% of them were below that opening price. So gapped up, couldn't hold it, 68% down from the opening price. On average, lost 1%. Okay, so you could see here that gap up at the open. So far, what's been happening is traders have been using it for the most part as an opportunity to sell. Okay, by the end of the day, most of those stocks were down. Not all of them, but most of them were down 68%. So let's do a little bit more filtering. What about those that gapped up more than 5%? Like, what about the really big gappers? If we had any in the S&P 500, I'm going to click on this button, up more than 5%. So there are only 38 instances that happened. Okay, 38 observations out of all these. And here, those that gapped up a lot, so we could see here's Tesla, for example, gapped up 6.7%. That happened actually yesterday. And that one continued higher. Actually, by the end of the day, you could see. So this one would have been over here, right? That one continued higher. FDX gapped up 6%, but you could see that one couldn't hold on to that opening price. It was up 6.3%. That's the opening price. First half hour down 2.5%. By the end of the day, it was down 2.7%. Went from 174.65 down to 169.99. Some of these were on earnings as well. So you could see here, this is indicating there was an earnings news. You could read about it that way. But you could see those that started out strong at the open did not continue building on that strength throughout the rest of the day. This shows 92% of them were lower by the end of the day from the opening price. What about those that maybe had smaller than 5% gaps? So let's go the other way. Smaller than 5% gaps, you can see they're still weak, right? So even if it didn't gap up a lot, even a smaller than 5% gap, 67% of those were lower by the end of the day for an average loss of 0.9%. So that's from the stocks that were up in the morning. Let's check the other way now. What about the stocks that were down? All right, let's compare that group. So we go to this. That's the gap down report by switching this tab. And here we got 4,894 instances that happened. Stock opened lower from the previous day. You could see here that 52% of them, right, were lower, still continued lower by 10 a.m. By the close, 52% of them continued lower. Okay. As far as, so I still have this filter on S&P 500. S&P 500, still, even those that were down on the day, 59% of them were lower by the first half hour, 53% were lower. So really, this is kind of indicating that to me that no matter what the news was in the morning or the reaction was in the morning to a stock opening higher or opening lower based on that opening auction, those VWAPs started kicking in, and the VWAPs were predominantly on the sell side, right? So on the sell pressure, that's what we've been seeing in the last 20 days. I don't know if that will, continue, but to me, it looks like once those VWAPs kick in and they, their orders, they're scooping up, cleaning up the buyers, and there's still more weight on them because we could see no matter if the stock moves at the beginning of the day is lower, it's not necessarily a buying opportunity because you could see that there's a much, more favorable towards the sell side. More of them are down than up. And those that gap up, we could see here that, you know what, let me remove this. Yeah, let's go back to it. Okay, still. So those stocks that gapped up, presumably, why are they up? In the morning, you'd have to have more buy orders than sell orders, right? And that's why they're gapping up higher at the opening auction, more buy orders than sell orders, whatever that reaction, whatever they were reacting to, either news, earnings, whatever it was. But those still, after the opening, could not hold on. For the vast majority of them, could not hold on. That's in the S&P 500. And same situation as the group as a whole. Hopefully, I don't know if there's a follow-up question there from yesterday, if the person is still on.
David is on. He did ask, what I'm trying to get at to is it would be helpful, David. I don't know if you want to come on live and ask your questions. Rob was trying to ask it. It says, what I'm trying to get at to is what it does, I guess, the day after the gap, like today, for example.
The next day?
Yeah, so I guess, David, you want to see something gapped yesterday and what it's doing today? I'm not exactly sure. I'll put the link in the chat to the Zoom, David, if you want to come over and ask your question live. You don't have to turn on your camera.
Right. So this is to give a general idea. You'd have to go then pick the individuals and take a look at it, because there's an unlimited ways, right, that you could analyze it. You could look at it. What does it do in the first minute, first 5 minutes, first 10 minutes, first 11 and a half minutes? So there are different ways you could start analyzing it, but as a report, we kind of give a general. We had to pick some points, right, some points in time to get a general idea. But if you have like a specific one, you could also just go to, let's say, Qualcomm, right? And we provide that VWAP table for you guys. I'm not sure if my VWAP table is as it might be different than yours right now, because I'm working on upgrades here. You could see here, this is what it did yesterday from the pre-market VWAP to the opening. But let's say you're just interested after the open, what did it do by 9:35? You could track it this way, because this is the price progression, minute by minute VWAP, the high low for that VWAP, the volume for that minute. So you could track it this way if you had a specific stock in mind within intraday. Of course, if you wanted just to go to the historicals and look, over here, you could do day by day. You could download this list. So you could see here the opening price closing price, and so forth. So there, some of it, people have good questions, and sometimes the questions that you have, you would have to download the data and just do it in Excel, right? Because a lot of times there's so many different questions regarding the same data, and different analysis you could run on the raw data, that we do make it available. You can download it into Excel and then run your analytic from there, right? Just because there's too many variations to analyze.
There you go. And the download button is right in the upper left-hand corner, right under the.
Yeah, exactly. And I think you could download you could go back on the VWAP. You could do the pre-market VWAP too.
Actually, we have a surprise guest. A hand was just raised. David has come over to ask some questions about the pre-market. Can I put him on?
Yeah.
All right, David, thanks for being brave enough to come on. Much appreciated. Here you go, buddy.
Hey, David, how are you?
Unclick your mute, David. You're on. Thanks for joining.
Hey, can you hear me?
Yep. Hey, David,
Perfect.
how's it going?
Hey guys, love the show. I watch it every morning. I kind of trade alone in a basement, so this is great for me to get a feel of the market. And I'm in a small town in Canada, so I've been a MarketChameleon fan for probably almost since you started, and so
awesome.
it's it's really helpful for someone like me. Yeah, so I had a couple of questions now that I got you, but to get back to this main one about the gap ups, I was just wondering if you could easily, after the gap up yesterday, if you could look at the stats really quickly for how the market might open this morning.
How the market might open this morning based on yesterday's gap?
Yeah, based on the gap yesterday, which is probably less than 5%. If you could,
right. And then what it might do today?
Yeah,
that stat we don't have, not from here. I'm not sure. Let me think about. I'm trying to think of a way you would be able to run this maybe in an Excel, but I'm not as a master list of all stocks.
Yeah.
I don't have that. Yeah, by the end of the day.
That's kind of what I did was I downloaded this information to Excel, and I did it that way. So that I get what you're saying when you say you have to download this stuff, the data. I was just to Excel. Yeah.
I don't have a way to look at it from that perspective. We do have, I think, let me just while I have you on there, let me just see if this might help. Let me see.
Yes, right there, the gap up, and
I know that in the events, if we take the largest one,
correct,
opening gaps, so if you did something like this, what this will do is just look historically at the largest, let's say, positive opening gaps, and then see what it usually did, by the end of the day, and what it does, following. So on an individual basis, not on a market wide. I know your question was on a market wide, but this would be on an individual stock basis.
Yeah,
you can see
get that. I use that for the FOMC meetings, and you can use it for Christmas and any of the kind of major events, Easter and such. So that's a great one.
Yeah. So that that's one place. Let me see if this. And just so if you guys are watching for the first time, what it does is it filters out the largest opening, the last biggest 12 opening gap moves, and I think it goes back 3 years, and then creates statistics what happened that day for the stock. And you do have some notes here, so you could see here the market gapped up, and it was probably doing the same thing, right? Because market gaps up, it was acting in sympathy with it. So we see here, for example, in Qualcomm, right? Yesterday, the market was up. It did gap up yesterday. One day later, if we just follow it, 67% of the time it was lower, 33% higher. days it was higher for an average loss of 2%. Let me see, just in the last 20 days on a price action, if we do,
And while I have you too, when it comes to open, when you say open price, is it the pre-market price in there somewhere, or is it just strictly what it opened at? I know sometimes it's a bit confusing what the price was used as
Right.
the open.
right. So, real quick, so these are the opening stats for the last 20 days, just in Qualcomm. So you could come down here, look where it opened, its average moves, the average move from open to high, open to low, intraday in the last 20 days. But yeah, so you could kind of get a sense of like the distribution of returns in the last 20 days, like what it's been doing and, where it's been trending throughout the day. When we talk about opening price, there are a few things that we look at, because when there's an opening price that's usually it's on the listing exchange, right? So stock is listed somewhere, let's say NASDAQ or NYSE. And when there are a lot of orders that are queued up in the morning to get filled when the market opens, the specialist conducts what it's called like an auction, an opening auction, and takes all those orders, matches up the ones that at a price that he can, and opens it on that one price. So it's like a single price auction, right? Not like continuous trading, but a single price auction. But a lot of times, if there are no orders or there are a little bit of orders, what he'll do is open it up at a price, and then what happens is that the stock starts trading normal, continuous trading. He puts out a bid and an offer, and then volume starts coming in. So what we try to do, let me go over here, and this is a good question because I had this before. Our opening will not always match up with the opening price of, let's say, Yahoo Finance. And that's because there is an official opening price, but that volume could be very low. So what we do is try to get a sense of where really is it opening. So we'll look at the first minute, maybe even the first 5 minutes of VWAP to say, well, this is probably where you would get the stock. So in other words, if Apple stock opened at $110, but only one share traded, and then 1 million shares traded at $111, right? We would say that really that's where it's really open, at around 111, because it's not realistic you would get 110 if only one share traded there. Does that make sense? So we look at the opening auction, the volume at the opening auction, and the subsequent volume right after the open to get a sense of where did the stock actually really open? Like, where would you be able to get off your buy and sell orders?
Yeah, thanks. Thanks for that clarification. I knew that there was something to that. I couldn't sort it out myself. So yeah, that's kind of
right. Yeah, and I'll show you like really quickly here. Let me show you. I think I have, because we're working on a report for opening auctions. So just to give you guys, I know it's after 9:30, but these are good questions because I've had questions, regarding like the opening prices, like how do you calculate these gaps? Because people went to, like, let's say Yahoo Finance, right? And Yahoo Finance, I think they'll show you the official opening gap. So here's a list of, these are, I think, yesterday's opening volume. Let me see. So your opening price. So you could see here, this is the volume at the open. So for this stock, BLDW, there's 776 shares. So then we look at after the open, if hundreds of thousands of shares are trading at a different price than this, we'll say, okay, that's probably where you most likely you would got off your buys and sells, right? So you could see that some of these opening volumes are very low. Here's 100 shares, right? MAQC. Even if I do like, let me do S&P 500 companies. So these have a decent amount, but here's 5,000 shares, but that might not be that much for that stock. So that's what our algorithm's kind of looking at. You're probably most likely, if you're entering in order, especially if you're not doing it right at the, opening auction, where would you most likely be able to buy it and sell it? And we use that as the opening price.
Thanks so much.
Yep. All right. Thanks, David, for coming. Will, you're on mute.
Yeah.
To go.
Awesome job, David. Don't be a stranger. Anytime you want to come on, bring your questions. This is great. Thanks so much.
Thank you so much, guys.
All right. Happy New Year, buddy.
Happy New Year, everyone. Guys, stay safe out there. Have a great trading day. I know this year was a down year in the markets, so it's not, for at least the markets, it's not a great year. But just to get my son, he was 14 years old, he said just how lucky we all are. He said, Dad, did you know that the odds of us being born and alive are much less than winning the lottery? So we all won the lottery, guys.
That's awesome math, baby. That's awesome math.
Yep. But
all right, D, great year. Thanks for bringing all this information to the Chameleon community. We are all off on Monday from trading in the US at least. So you have a great weekend, my friend, and a great trading day today. Thanks so much.
Thanks, everyone. Happy New Year. Hope to see you guys Tuesday.
Awesome. Have a happy New Year, everyone. Bye-bye.